All right. So good afternoon, everyone, and welcome back to the Mortgage Servicing Hotline. Today is Wednesday, April 22nd, 2026. I'm Moyna Pammy, and I'm excited to be joined today by Io. Io, great to have you back here on the hotline.
It's good to be here, and it's good to see the community growing. So I'd like to thank everyone for joining here. For those of you who are new, maybe deviating off script a little bit, this is kind of an open forum for folks to ask questions, get information. It's meant to be interactive. We usually come with a topic, but figured it's a good way for the community to kind of grow and share ideas and share learning. So basically it's good to see that today's topic, we're seeing some purchases pick back up, we're seeing some rates hover around in some uncomfortable territory. And I know for those of you traditionally on this for servicing, you'll be surprised to hear us talk about some of these things, but what we're really focused on is how to get more out of the servicing portfolio and how to kind of grow that playbook in the context of a larger macro environment.
Great. And so today's topic is one that we've been building on across multiple hotlines. So we've talked about retention, we've talked about escrow management, and we've talked about the walled gardens that Mr. Cooper and Rocket are building. And so today we're putting that all together under one roof, the servicing to origination bridge. And I want to be precise about what that means before we dive in. We're not talking about the vague idea of staying close to your borrower and whatever that might mean. We're talking about a concrete operational system that takes data sitting inside your servicing portfolio and turns it into a direct pipeline of mortgage leads for your origination team. So how do we make that servicing data actionable for your origination team?
Yeah, and this came up in a big way. I, just came back from Acumen. For those of you who are familiar with that, it's the Credit Union Mortgage Association. And, it was really a big topic of focus is really how to, kind of connect the orgs related to servicing to origination. While it came up in that form, it still applies to IMBs, it applies to community banks who are really looking to kind of bridge that life cycle and understand what's going on in their homeowner's life beyond just that transaction and really build that relationship. And then for some of the depository folks here, I see some credit union folks and, some bank folks is amongst our existing member base is how to think about, how to, understand, there are probably folks that are getting loans elsewhere is, how we can kind of get our message out there and how to kind of utilize some of your services or your data to really actionalize what a full life cycle view looks like. And for those of you familiar with this, we've kind of put up that circle where the idea is, servicing feeds into origination, or origination feeds into servicing. But what ends up happening is when the experience is kind of broken, it becomes tough to complete that life cycle. So,
yeah. And so that's exactly the right frame. And so what we'll do is we'll get into both lanes of detail. But first, I wanted to take the temperature of the room because I think the gap between where people want to be and where they actually are is significant. And so, Io, do you want to launch the poll?
Yeah, I'm going to try to do this. And so give me 1 second and we'll kind of see where folks sit. So I just launched the poll and, Google Meets is different for folks, but hoping to kind of get some responses on where folks kind of sit. Is everybody able to see the poll?
Let's see. And so while we wait on results, I'm genuinely curious to see what these numbers look like. Because what I'll say is in every conversation we have with servicers, the same thing comes up. People know that this is a thing that they want to do. But the data is there, but the operational silos exist because you essentially have a series of different issues. One is you have servicing systems that don't necessarily work alongside the core system or the LOS system. You also have the operational demands in which, as a servicing team, you then have to do the day-to-day of, answering the phones, managing escrow, managing compliance and audits. And then you also have to still do the variety of things that, just pop up. So that's one aspect. And then also the other one is the idea that a lot of people actually have different management levels. So, one team reports into one senior person and someone else reports into someone else. And so it's very natural that that there's a lot of silos in there.
Yeah,
Um,
totally. And so what I'll do, it's good to see some participation. So appreciate that, everyone. Is I'll probably end the poll and then just kind of show the response to folks. Is what we're seeing is a lot of folks, and it should populate shortly. We're seeing some yeses and some nos. If anybody's brave enough to kind of come off of mute for the yeses, curious what folks are doing, and I'll probably give it a few seconds. And if not, maybe we carry on and kind of focus on why there's that disconnect for a majority of folks not necessarily having a documented way or a structured way to do that. So so basically, for those of you who maybe said no, is rest assured you're not in. Sorry, I got a question in the chat. Moin, do you want to read it since you might be able to see it?
Sure. So essentially, I think for one of the, hey, like we have something generally in place. It says we do a time-based process. Every X months, we send a scheduled message. And so what I think that means is essentially every 6 months, they'll send a generic or blanket statement saying we originated on in January. So, June, July, August, we'll look to send something out to them just to keep them top of mind. And so I think that's an interesting strategy in which it does at least give them an opportunity to say, hey, we tried to communicate. And something that we'll talk about later is how do you make that more automated? How do you make that more curated to that specific person in that specific time frame?
Great. Yeah. And I think, for those of you who said no, I think one, being aware of it is, half the battle. I think the second part is kind of understanding kind of the roadmap to build one. And a lot of this is, from other conversations we've had with folks around the industry, coming from different sides, is how they think about building a roadmap to kind of connect serving to origination and kind of complete that life cycle. So let's dive in, Moin.
All right, perfect. And so before, let's dig into the elephant in the room. So before we talk about what a great servicing to origination program looks like, we need to be honest about why most shops don't have one. There's really 4 root causes that keep coming up. And so I'll take us through them.
Yeah, and so this might be a little bit of a run-on, so apologies if it doesn't hit those 4 standard takes. But I think the one is, I think we're all aware that frequently the folks we buy our origination software from and POS systems from are different than our servicing system. And so basically there's this data silo that exists that, has different departments, different P&Ls, different systems, different incentive structures, and, sometimes even different buildings. And, I think it's important to kind of understand when folks have, jobs, is how their job fits in the context of the broader mortgage life cycle. And so I think the challenge is, creating incentive structure so that, if your servicing team is feeding a lead to your origination team, is how to reward that, how to structurally make that super easy. And, the status quo today is sometimes there isn't that incentive, and, certain systems are super, involved in which folks are drowned in the day to day. And so it's kind of thinking about how to manage that and how to create those structures in place. So.
And I think that structural point is huge. So I've sat in places where the servicing manager and the head of sales barely talk to each other. And it's not because they don't get along, and it's not because their worlds never intersect. It's just that you have different systems, different bosses, different optimizing functions. So therefore, there's no natural forcing function to kind of get that data back from the servicing system and operations into origination.
Yeah, and I think that's one of the leads to the second barrier, which is functionally data plumbing. I from what I frequently hear from folks is a lot of folks are porting data in Excel sheets and handing those over, but there's not really a way to do that real time, kind of have a centralized view of where loan balances sit, escrow status, and all that stuff in one record. I think for folks that are familiar with the concept of CRMs, is usually that's a centralized database that kind of houses everything. But we don't necessarily see those exist because some of the systems are so siloed in keeping data where they need to be. And so you're exporting an Excel sheet, sending an email, hoping somebody can filter that and kind of know what to do. And, that's kind of a hope and a prayer there.
And so what's barrier number 3?
I think the other part of that, it comes into compliance. And, when you have folks that are trained in a certain aspect, kind of crossing over into another, it's trying to make sure that you remain compliant. So if you're trained in servicing, it's, the RESPA and the TLUG guidelines. But as you cross over into origination, it's like, are you crossing a line? What are some of the implications associated with that? What are the concerns? And so, compliance is often a tricky part involved in that. And I think it's creating guardrails to kind of scope out what that compliance framework looks like if you're handing some of those things off. And so, maybe it's, as you think about the pipeline, it's, if you're handing things off, it's, maybe leave the communication to the folks familiar with that, where they have the right guidance on whether things should be informational, promotional, and how to kind of structure that outreach.
Got it. And then the 4th barrier is what I would call the urgency problem. Do you want to walk us through that urgency aspect?
Yeah, and I think this is more about the nature of the work itself. Is for a lot of my servicing folks here, we realize how busy it can be. I think there's a lot of time spent on escrow analysis, compliance deadlines. You get the random audit report that pops up and the customer inquiry here and there. And everything is frankly super urgent. You have a ton of fires to put out, and you're lucky to make it through the day and catch your breath at the end of it. And so I think it's easy for some of these things to kind of get deprioritized if it requires human intervention to, on top of everything, kind of feed this data back. And so, the window closes by the time you get to it to circle back, or, maybe you're on the phone with a member or a customer and they tell you, hey, they're looking to move, you're just trying to think about how to process that payoff maybe. And so I think that's the other problem or barrier there.
And so I think with the urgency problem, it is what turns a solvable operational challenge into a permanently lost revenue opportunity. And so what you have with each borrower and homeowner or member is you have a window of opportunity. And so essentially that window of opportunity might be the period of time where they need to bridge a gap between where they currently stand today and what they need to finance. It might also be like, hey, like for whatever reason, there's this new exciting employment opportunity that I want to take advantage of. And so that doesn't necessarily fit cleanly into like the every 6-month cadence that someone previously referenced. And so it's important to make sure that you're aware of, hey, what is the windows of time and what's the right message? Because if you don't have a right system to act on it, the window closes because they've completed the transaction with someone else. And so I think there's a question that just came in. Let me read this out loud. This sounds great for bigger shops. We're small. Is this realistic?
I'll take that if that's okay with you.
Yeah.
I do think it is realistic. I think one of the things that we're seeing is, regardless of portfolio size, there's a way to kind of have structures in place to make this more achievable. I think, everything on everybody's mind is technology, and, not trying to say technology is the panacea, but, functionally there are ways to create structure processes in place that can get data from point A to point B. A small shop can be, the advantage is actually more personable about it, because, you have that loan officer who may know the person super well, combined with some of the data that you're getting on them. And rather than relying entirely on automation to cover such a broad customer base, is you really get to have those specific conversations. You don't need to have some crazy model to tell you everything about a homeowner, because you might know them personally. You might know them in a certain manner that creates that curated experience for them. And so I think there are ways, and I think it's about knowing where you need help and using the tech solutions around you to kind of manage some of those workflows and processes.
An interesting framework that I've heard in terms of dealing with this gap between I am where I am today, am I large enough or of the scale where I'm able to get the solutions that I need? And another framework that I've heard is, are you able to pick the right team that's building the software? Because something that's really interesting with AI these days is the rate of change and innovation is really fast. And so it's really important to find the right partner who will, one, continue to iterate, but do so in a way that actually brings you along that journey. So that way, instead of just, pushing change after change after change out, you're able to actually understand what that change means for you. And on the flip side, you're not necessarily stuck in, hey, we committed to this thing that might not be as relevant to you today, but it's going to take us another 24 months to get to the state that you actually need. And so I think finding that right partnership is actually another hidden gem in making sure that your outfit is able to get the right solutions that you're looking for.
Yeah.
All right.
I think that makes sense. You want to keep going?
Yeah. So let's actually get into the specific tactical playbook. And so there's basically two lanes on this bridge. So let's take them in order. So lane one is essentially most servicers think of first using the data from your existing mortgage portfolio to surface leads. And so would you be able to walk us through how we can actually use the data from our existing portfolio to get new leads and opportunities?
Yeah, I think the interesting thing about, the servicing team is maybe to flip it on its head. You all have the most up-to-date data on what's going on in a homeowner's life. And so, before you write a single line of code or, question on some integrations, I think it's important to ask, what is the borrower's rate or the homeowner's rate today versus market? And is there meaningful spread? And so I think a lot of folks are familiar with when rates drop, they get inundated with opportunities to refinance, but we have to put it in the context of their fees and what is the net benefit to the homeowner, I think is one thing to keep in mind. How much equity have they built? We're seeing historic equity highs in homes and it keeps growing. Is understanding, okay, if folks have equity, it's capped in their home. Are there things that they can do with that or creative solutions to help solve that? I think three is something that I think is newer and encouraging folks to think about is behavioral signals. A lot of folks are looking at portal activity, requesting payoff, interactions with customer service rep, inquiring about balances. Those I think are soft signals that maybe provide a little bit more detail into what consumer activity will be. And I think the last is kind of life events, is understanding where the age is, where they're moving, things going on in their life, I think is really important to managing that. And I think all of those things kind of add up into providing some sort of data-driven view on where that homeowner is.
Mm-hmm. And something that's also interesting is with the rate spread question, particularly relevant right now, is heading into spring 2026, there's about 5.5 million homeowners where they're in the money, which means a refinance would save them at least 75 basis points on their interest rate. And so that means that there's this massive addressable market sitting inside of portfolios in the country today. But with rates choppy, where it's a little hard to see exactly where the rates are going to move over the next week or month, any window of opportunity can actually close really quickly. And so it's one of those things where the servicers who have a system already running to capture those homeowners when the moment is right will be the ones that are able to capitalize on that opportunity, because someone would happily take the opportunity to lock in those rates and savings before the window goes. And once the window's closed, that's no longer an opportunity that's viable.
And not to be a math nerd, to double click on that, 75 basis points is a lot. I think if the average balance of a loan is about 250,000, that saves you probably about 30,000 of cumulative interest if it's a 30-year mortgage. And so that's like meaningful cost savings there. And so it's important to put that in that context. So I'll keep going and kind of advance once you have those data signals. Is kind of the idea of segmenting is, prioritizing, ranking, and putting things in tiers that are relevant. So maybe one tier is about rate and term refinancing, where there's rate spread, clean credit history. The other could be around refi targets, where equity's trapped. Maybe they're looking for some sort of liquidity. And I think the other is just purchase candidates, is folks approaching payoffs, life changes, events in their life, looking to upgrade, move homes, things like that. Is people are pursuing transactions in managing their life. And I think the mortgage is a vehicle for that, but life happens and people are actively managing their life in some sort of context. So I think everything else beyond these kind of event-driven signals kind of goes into that nurture track and how you're keeping touch with them and how you're making sure that they know that you're with them beyond just the initial transaction.
And just a question for you. How does the segmentation help us in terms of how we approach this overall process of trying to get someone to do a transaction with us? Like, what does knowing that someone wants or might be open to a rate and term refinance versus a cash out refi versus a purchase? How does that actually change how we operate or think about the opportunities?
I think it's this idea of personalization and how you present offers to them.
Mhm.
So, for example, spamming irrelevant offers isn't helpful and can actually harm and hurt some of your brands. And I
Mhm.
think the more you understand and put yourself in their minds for what would be helpful, it deviates from that opportunistic framework into a, hey, I'm here to help you. And so, I'll kind of reference an anecdote. Is I was going on Reddit earlier and hearing what folks have to say about when rates drop, how folks reach out about refinancing, and people are always questioning what's in it for them. And I think, if you're providing blanket offers, it's easy for somebody to come across and think that, versus if you're providing, hey, here's the benefit for you. I'm, presenting this offer for you because it makes sense. I think you kind of get that experience there. So I that's my thought is, in this world where there's a lot of volume, it's better to personalize and help folks cut through the noise.
I think that's pretty interesting from the perspective that these are high ticket transactions. And so instead of trying to treat it as a funnel to get as much volume through, it's one of those things where you can also take a moment to really curate that message and experience. So that way, instead of it seeming like, hey, I'm just trying to do a one-off transaction with you, it's able to say, like, hey, we've done business before. We'd love to keep doing business with you. We value this relationship. And it kind of sets you apart from other people that might be reaching out to become more of a trusted advisor. So that way, instead of it viewing as like, oh, they gave me an offer, it's a yes, no. It's like oh, that's actually interesting. I might not have thought of that myself. But now that you're talking about it, that's not exactly what I need, but maybe this other thing will work. And so I think it actually opens up a door for you to have a more robust communication about their holistic health and their financial goals. And
The,
so,
the other
yeah,
thing I'll add there is just the idea of putting yourself in the homeowner's shoes, is understanding that they maybe do 2 or 3 transactions like this in their lifetime. And so there's a lot of expertise that servicers and originators have that is helpful to impart on these homeowners so that you can help shape their journey. And I think that personalized guidance and human touch is really important in framing yourself and positioning yourself differently. So
yeah, I think that's a great point. And so now that we've segmented our borrower base, what does the actual handoff process look like? So I think this is where a lot of people might say, hey, I've done some generic work around identifying opportunities and kind of grouping it together. I feel like this is where a lot of programs break down in practice.
yeah, and I think it's basically documenting where accountability lies once the handoff is made. So, you know, leads sent from servicing system to POS, tracking how it reaches there, when it got sent there, who is the officer responsible, and recommending that folks where the original LO is still there is routing that to them. Human touch there. Where they're not is having some system to assign those workflows, because the worst thing that can happen is somebody not having ownership over something. And so
Mhm.
I think a targeted formatted strategy, so each LO knows what they're doing, who's receiving what. And for example, when creating an offer, is some sort of structured level of agreement saying, within X hours of getting a trigger, we should reach out to this homeowner. And for proactive outreaches, maybe we should try to get something out within a timely manner, because you never know how quickly they can act. So I think looking at that, having that program in place will allow folks to say, okay, this is where things worked. This is where maybe things fell apart, and kind of having that data driven approach to understanding, did they reach the homeowner? Did they convert? And, improving that loop until we get, north of where we are today. So.
And I think that actually gets back to the idea of picking the right platform, tool, and team and partner, because I think a lot of this goes back to making sure people understand from the consumer perspective what's going on. Because I think too often we get trapped in the framework of, okay, I'm doing servicing, so therefore these are the sandbox that I play in. Someone else is doing origination, and that's their sandbox. But from the consumer's perspective, you're dealing with that one institution. And so what that means is they might call one person asking a question and then be confused why they now are kind of being bounced around or there's no shared context. And so I think that idea of making sure that you close the loop informationally plays a massive role in making sure that there's an effective and quality campaign to reach these homeowners. And so in terms of the actual content from your, dozens of conversations over the last quarter, how do you actually reach out without feeling like a sales pitch or I'm spamming or I'm kind of like annoying them with one of many offers that they're receiving?
I think it's all about insight. If you're leading with a financial product, you're implicitly telling someone this is a financial relationship. And so the message should really be centered on, we've noticed your home is appreciated or homes in your area have appreciated. Congrats. That's always exciting for folks. Wanted to make sure you kind of have the full picture of what you can do with some of that equity, because it remains, and probably more verbose than I'm going to say, trapped in your home. If you're looking for opportunities to capitalize on that, here's how we can help. That's a much better offer than saying 0.5% is the difference in your rate, and let's see if we can get something going. And so I think the framing is the important part. And I think that leads to dramatically different conversions. And it also allows your message to stand out in a world where people are just, frankly, just spamming and hoping that they get the conversion there. So
I think that also kind of goes back to what you were talking about in the sense that if you work in the mortgage industry, you see tons and tons of transactions every day. And so it's easy for you to internalize what 75 basis points of savings would mean. But to the homeowner, it's like, well, okay, like I need to sit down and figure out the math of what that means and like why I should even consider that.
right. I think that's right. Should we go on to lane two?
Yes, of course. So now let's talk about lane two, the one where we're particularly buzzy at Acuma. So for depository institutions, on top of everything we covered in lane one, which is essentially your existing loans and portfolio, you also have the additional touch point as a pure play servicer that pure play servicers don't have. And that's customers or members who already bank with you, but have their mortgage somewhere else. So the question I think is, how do you identify these people? How do you use the existing relationships to earn that next mortgage transaction?
Yeah, and for my folks that are with non-depository institutions, I think the way to also think about this is, how for folks that came to you for a mortgage and maybe went elsewhere, is how to do that too. And so I think for the depository folks, it's really about, you have this relationship with someone, whether it's not mortgage, but maybe it's checking or how they manage their life. And so there's a lot of transaction level visibility. There's a lot of conversations that you have with them. And you can see if somebody's, behavior is changing, such as rent payment went up, or they ask you, hey, I'm looking for credit to build a pool, things like that. You have a lot of visibility into. And so you can kind of see all these things. And the question is, a lot of folks have several customers, is how are you getting those actionable insights? It's one thing to have somebody go through an Excel and try to match different fields together. I think that's where the systems and processes go together, where you need some structured way to go through this and kind of see things and understand, when folks pay off a car loan, is what does that mean? Does that mean increased cash flow? And what are some things that they might be interested with some of that increased cash flow? So these are all like mortgage readiness, or what I call home adjacent financing readiness, that I think are really important, that are in plain sight. It's just, can you see it?
That's such a powerful reframing of the unique position you have as a depository institution, because it means that your other adjacent operations also feed into this mortgage engine that you're building. And so, at least from my perspective, I haven't heard of that many depository institutions that think of it that way, as, hey, everything kind of flows together and reinforces each other.
Yeah. And I think that's where a lot of conversations we're starting to see converge towards, is how do you stitch together all these disparate data sources and kind of get that, what I'll call is renter conversion play, or, increased cash flow, new job kind of life events kind of change. And so somebody who's been with your organization for a few years, clean payment history, they're making payments, is how do you prepare them for that home ownership journey? Are you just saying, hey, when you're ready, come to us? Or are there tools that you're providing on home buyer education, how to get prepared, how to, structure down payments, and the range of things available to them? So I think it's all about thinking about when they're ready is, are you ready to do that softball? Are you ready to do that pre-qualification and make sure that they know that they're able to afford a home? Should that be interesting to them? And I think that's the valuable part that folks are starting to orient around.
And what's another use case? What's the secondary use case that we can potentially think about?
Topic on everybody's mind is really recapture, and how you use this data to kind of recapture folks that are probably maybe go elsewhere. And I know a lot of this is changing with some of the trigger lead stuff, which we've talked about before, but you can kind of see from patterns and interactions who might leave. Maybe it's based on challenging experiences, or they were reached out to before. And so I think it's all about owning that relationship so that when the rate spread opens up, you have the right opportunity to get your messaging across, so that if they decide to go somewhere else, it's not going to be because they don't know about your offerings. So it's building that trust, making sure when they walk into your organization, they know what you're offering and that you're ready to make the offer when it's relevant for them.
And so we covered a lot of different topics and strategies and concepts. To help us kind of crystallize what we talked about, would you be able to say, from your perspective, if you're looking to manage your servicing portfolio, what are some key takeaways for us to consider?
I think it's really all about having programs and structures in place. I think if you're hoping and praying, chances are you're probably not going to be super effective at that. And so I think we talked about the data piece is having ways that your systems can connect and talk to each other. There's an element of training, and organization is creating lanes that allow that handoff and track responsibility. But I think if you're starting to think about this is great. I think that's where things should be. And I think it's all about actioning some of these topics that we talked about, or just, exploring these conversations with your internal team or broader team, because I think it is important. The example I'll give to kind of end it is, in a world in which somebody has their most valuable or most personal asset with you all, is if 1 in every 4, 1 in every 5 is going somewhere else, we have to think about what are some different things that we can do. And so hopefully some of these programs and structures help folks curate some of those experiences and keep those relationships beyond the transaction. So appreciate that. And Moin, any other thoughts? Or
the last thought I'll say is, use your other products and arms as a depository institution to feed the beast of the mortgage engine. And with that, thank you so much for joining the hotline today, Servicing to Origination Bridge, and we'll check in with you guys next time.
Appreciate it. Thank you, everyone. Cheers.